Welcome to the Real Estate Show on KMED. Pete Belcastro, one of the real estate guys with you here today, and thanks for joining us here on KMED. I'm a principal broker with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED we'll talk about all sorts of real estate-related issues and topics through 7.5 years and almost 400 shows. That's a lot of talking, isn't it, about real estate? And, of course, we've got the best real estate consumers in Jackson County who listen every week right here to KMED. So thank you for being here today. Guy Giles is in the house, our resident mortgage lending expert from Bank 34 Mortgage. And first of all, Happy New Year to you, Guy. Nice to have you here. How you doing?
Hey, it's good to make it back. I don't really have the 2017 thing down on my on my writing skills yet.
You were gone, weren't you? You were doing something really cool. Weren't you gone or something?
Did I?
Did you go to Mexico?
Must have been really cool because I don't remember it at all.
Oh, okay.
Ever since I went down and built houses down south, anyway, helping them with the flood stuff. That's the only trip I took all of last year, but
really?
Well, other than one quick trip to Vegas.
Well, before we get talking, about other things, let me just bring us up to date on what's happening with the world of mortgage interest right now, because after the first of the year, the rates rose a little bit there, and people are all giving all sorts of dire predictions, what's going to happen, this and there. What's happened since this has started for you?
Well, starting to see kind of what I talked about before. I mean, the rates overreacted a little bit right after the election. Everybody was super optimistic, and I think they still are as a country, that we're going to go in a little different direction economically. So they just kind of hedged their bets on the rates. They went up a little bit too fast, and we see them easing back a little bit.
Well, I was going to say this week, as I went to the realtor meetings, I went to 2 of them this week, and that's what I heard was that the interest rates have kind of slowed or stopped or kind of even. Yeah,
they're kind of trickling back a little bit. I mean, there's a lot of rebalancing that goes on this time of years with portfolios, with people's stocks and everything. They have to have a certain amount in long-term investments, certain amount in stocks, different things. So that'll cause a little bit of this, to help us as they do that throughout the next month or so. And these guys might even be able to speak to the exact times when they rebalance those. But, that and, like we said in the last show, something's got to give. People still want to buy houses. People still want to do it. They'll either loosen lending or we'll figure out, the rates. Okay. Thankfully, that's helping a little bit right now.
All right, one more question on this part of it. The FHA, which, does lots of loans, they lowered their mortgage interest rate basis by 0.25%. What does that mean? Is that a good thing for consumers, or tell me why is that so significant in getting so much kind of play around?
Well, it'll help you qualify for a little bit more. I mean, I'm not the kind of guy that tries to get people to, the top of their budget anyway, but anytime you can save a little bit of money, it helps. Like I was saying kind of before we started the show, I'd like to tell you that the government just did it out of the goodness of their heart. They wanted to save you a little bit of money, but the reality is they were losing market share. And that kind of speaks to the overall climate of mortgages, in general. Again, people are going to, if they start losing the revenue from the loans, we're down about 21% since these rates started going up.
So they just lost market share.
Yeah,
right.
And
to what? Conventional loans.
Yes, and that's the whole market. If you put in VA, FHA, USDA, everything together, it was about a 21% drop in that last quarter. So they are looking for ways to just kind of spur the market again, because housing is a huge portion of what happens economically.
And this past week, a 30-year fixed rate roughly is in what range?
What range is your FICO in, buddy?
I understand that, but kind of give me your range for people. You got to what?
We're in the low 4s now for a conventional loan with good credit.
All right. So, what about the government loans like USDA, VA? Where are those at this week?
Kind of in the high 3s.
Okay.
And again, it's FICO driven, so I can't give any kind of an exact thing.
I know, but that you're still talking to people. You got to tell them something here. All right, but you're right there. They didn't go up. I thought they were going to go up a lot higher, it seemed like. But, and that's probably a good thing.
Part of it had to do with the Fed. They even kind of mentioned that they're not going to get as aggressive with the rates as they were talking about even a month ago when they raised.
All right. So, well, don't forget, you can always Google Guy Giles at Bank 34, and he's the guy who can help you here, because it's interesting times right now with interest rates the way they are, and all the things. So,
Still a good time to buy. Everybody's moving here.
It's amazing. I've been hearing that as well. Well, also in the house today here at the KMED studio, Monty Williams and Carolyn Ryder are the owners of Eisler Medford. They're CPAs and have been in business for 17 years. That's a long time. We talk about weathering ups and downs in real estate and stuff. I guess you go through the same thing in the CPA world, don't you? First of all, welcome to the show.
Thank you.
Yeah. Thanks. Whoops. Do you do that, Carolyn? Do you go up and down in your business as well? Tell me a little bit about that.
There's always cycles that we hit. Tax season, of course, for us every year. That's kind of the rush and where our families go, see you in the spring. And then in the summertime, things slow down a little bit. We have kind of a multi-range practice where we not only do the tax work, but audits, financial audits also. So that kind of keeps us off the streets in the summertime. As far as timing and other cycles, when the housing market kind of took a dive, I think everything tightened up, and I know we kind of just battened down the hatches and weathered the storm, and we've come out stronger on the other side.
I think those who did that, you're right. You come out stronger on the other side. You can survive and change and be better for it. Well, tell me about what's going on in the economic side of real estate that a lot of people don't see and understand. And that's kind of what you do. You're advisors in terms of telling people what their options are and some of the things. One of the things, Guy, we've learned, about being brokers is that I'm not a financial person like you, and I don't give that kind of advice out. So we got to turn to people like you. Is real estate related topics and issues, do you do that a lot in your business, or tell me how real estate relates into what you all do?
We do quite a bit of it. One of the things that people ask us more often than not is what the taxation issues are when they sell their personal residence.
Okay, number one topic there is that. Okay, so when I sell my house, I want to know what the tax implication is going to be.
Yes.
Okay, all right.
And there's some very specific rules now. It used to be 20 years ago, there was a rule where if you reinvested within a certain period of time, there was no tax. Well, that went away a long time ago.
Okay.
And so now there's certain limitations. If you're a married couple, you can have up to $500,000 in gain on the house before there's any tax on it. $250,000 on a single person, and so those are kind of the things that we talk to people about and find out where they stand with regard to those rules.
Do you see lots of people who sell their homes? I mean, as a broker, you see people who've paid their homes off. My goodness, how wonderful that is. Those are the ones that generally are probably more concerned about that, aren't they? If you don't have a lot of equity, the tax implication is not as much, correct?
Correct.
Yeah. All right. Well,
and a lot of those people that are paying their houses off have lived there for 30 years, and so they've weathered it up and down, and so they may have a considerable amount of equity.
So if you have someone with that kind of equity in a house, what because you can sell. Seriously, you can. I've seen people buy houses back in the 60s for $5,000, and they still have their things. They've sold them for $400,000 or $500,000. Those are the kinds of things that really play into it, don't they? What can I deduct from that, Carolyn? Tell me how that works.
That's actually kind of one of the things that I have to answer quite a bit. Is it's like, well, but I have. I've refinanced my home and I have $200,000 of loan, so that doesn't count, right? And I'm like, loans don't matter. It's the basis in your home that sets kind of the bar, and that basis is your original purchase price and major improvements. You've painted, you've re-roofed, you've put fencing in, landscaping.
Yeah. All
of those major improvements add basis to your home. So we look at that basis versus the sales price to come up with that gain piece, and that's the really important number.
Should people, when you I'm getting a new deck, on my house right now. I've spent, thousands of dollars in improving it. I've kept all my receipts. Should I keep all that stuff for you? If I take it when I sell my house this year, I'm gonna make some money on the thing. So I should keep all of those receipts over the years that I've done in improvements. Is that right?
Absolutely. Everybody should have this is my home file, and in that, all those major improvements, all the receipts from painting to, like I said, the major landscaping, the deck. That's tremendous. All those costs add in, and if it's questioned, you really need to have those receipts.
Is there an advantage to not do this at all? Say if I'm not going to make $250,000 or $500,000, Does that matter? Or do I still want to do what you just said? Keep these things together and have this?
Well, if your crystal ball's working really well and you know you're not going to have that much gain, okay, fine. Don't save those receipts. But, things happen, and it's, my husband and I have been in our house for 17 years. When we bought it, we had no idea we were going to be in that long.
Yeah.
So, and we don't foresee changing. So it's like, the market could do multiple things, and we could have $1 million gain years and years from now when we decide to, pull the plug.
Mm-hmm. Well, that's pretty interesting that.
I'm actually learning some stuff there as far as that goes. I mean, that's why you should probably call these guys. I just got off the phone as I was walking in here to a lady that is holding back on 2 of her retirements because she wants to wait until she buys a house so that she has a little bit of write-offs before she starts doing that. And I mean, there's just a lot to know, and just stuff that us average people, it's difficult if you don't do it for a living.
Well, it's still the biggest investment that most of us have is in our home. And so, when you go to sell them, you want to be able to make the right decisions. We always say we want our listeners to be smart real estate consumers, and it seems like we get to your end, Monty and Carolyn, at the tax end, and that's the last thing that we think about sometimes. Also, what that implication might be, or am I doing the right strategy? So, really, coming to talk to you is a good thing to do before you start thinking about selling or that kind of thing. It seems like.
And that's absolutely the key, is to come speak to a professional before you do it, and try not to wait until you've already done it.
Mm-hmm. Now, home, I understand the way the home thing works and the sale of your personal residence, and that works. What about if I wanted to buy a second home? If I wanted to turn my home into an Airbnb place, or if I wanted to do other things with my properties, not my personal residence, because I know Guy will always say, you can get a loan, you got to have a certain loan. I think a construction loan, for example, you got to be an owner-occupied. You can't be an investment or kind of things like that, right?
They're not really doing spec loans right now at all on those. So we talked about that in a legislative meeting a little while ago.
Yeah.
And again, there's just a lot to know. I have a really good friend that's a pretty successful real estate agent in town, and she starts out every conversation with, "Hey, good morning. You're not going to believe how much money I'm saving now that I'm doing this corporation thing." She's got something going on with these guys, and it's just a really good idea to go in and find out, what you can do to save some money.
Yeah. What do I do? But if I have a vacation rental, things like that, the tax implications and things are different, right, than an owner-occupied place. Is that true?
Absolutely.
Is there an advantage to do something like that with a vacation rental? Tell me what the tax things world of that would be.
Well, it seems like right now, especially in this area, we have a ton of people that they live here in the valley, but they have their Sun River homes, and that's their second residence. Right. And, well, gosh, we're not there all the time, so they're going to go ahead and rent it out. But if they use it more, if the rental use is de minimis, it doesn't have to be included in income.
Say that again. If the rental income
is de minimis, which is
only de minimis.
De minimis. Very little.
Very little. I didn't know what that word meant. Okay.
It's
de minimis.
There you go. A word of the day.
Yeah, it really is.
That's 4 syllables. That's way deeper than we usually go.
Very little. Okay.
See, it takes me to come in here and do this. So anyway, if your rental use is de minimis, then you don't have to pick up that income. It's just kind of free money to you as the homeowner.
Really?
But it's your second residence, so you get to deduct your property taxes and mortgage interest on your Schedule A, just like your regular your primary residence.
What is it? What does de minimis mean? What does very little mean in terms of rent then? Because a lot of people have second homes, they rent them. I mean, sure, okay.
It would have to be 10 days or less. Is kind of the rule of thumb. And if
a month or a year?
For a year.
Oh.
So it's real. It's when I say de minimis, it's real little.
Yeah. So most people obviously probably would not do that then, right? They would have to declare the income, right?
Right.
Most people would do that.
Right.
Okay.
And then you have to weigh how much you use that residence yourself as a vacation home versus how much it's actually rented. And a lot of times you have to do a day-by-day split.
Really?
So if you rent it for 6 months and you use it for 3 months, then only 50% of the costs of that residence for the year would be included as a rental fees.
Do most people that you see who have vacation homes or rentals like that, do they rent them out? Do most rent them out at some point to earn money, to earn income from them? And it seems like it would make sense to.
Absolutely. A lot of them do. I'm not going to say all or even most, but there's quite a few that do. Especially in the real popular vacation areas, it makes sense to have that asset. That's a good asset working for you, and it might as well pay for itself. So being a vacation rental is a great idea.
Yeah, and we're seeing a lot of them, as you say. It's they're out there. Do you see much lending on that, Guy Giles? How do you lend on second homes and vacation rentals, or how do you lend on that?
Most of my second homes are people moving up here from California, and they'll buy a second home up here. Hey, I'm going to retire in 3 or 4 years, and I want to get a place. My kids already live there, something. So they're already coming here, spending a couple weeks a year. So I generally do things as a second home. I mean, obviously, if I know that they're going to rent it, that's a little different. But for the most part, they come up here, they buy a second home, then, they're just kind of getting ahead of the game with the rates and with the appreciation that's going on around here, just with the intentions of moving into it full time later on. So I do a ton of second homes. You just have to have. You can even get gift money to buy them. You just need 5% of your own funds. I mean, so it's almost just like buying a primary residence. I mean, literally the rates are the same, everything, just a couple of different, weird little things if you're self-employed with reserves. But for the most part, it's a good deal.
And in a good real estate market like we're in, demand for those vacation rentals in second homes is going to increase. And we're seeing that as well. I want to ask you all when we come back, we got a break coming up here. What has recreational marijuana done in your world of CPAs and land and real estate? Like everything else, it's changing the way we do business. We're coming right back to the Real Estate Show here on KMED. We're coming right back after this. The Real Estate Show rolls along here on KMED. January 14th is our date. Pete Belcastro, one of the real estate guys, with you here today, and thanks for joining us here on KMED. Happy New Year to you as we head into, can you believe this, 2017. What a year real estate had in Jackson, Josephine counties in 2016. My goodness. Billions, over $3 billion sold. That's remarkable. Anyway, Guy Giles from Bank 34 Mortgage is here today on the Real Estate Show. Guy talking about interest rates, how they've risen slightly, but have scaled back a little bit. So you're encouraged.
Yeah, I mean, if you look historically, anything below a 6% rate is a really good rate. So we've been pretty spoiled lately, and don't get me wrong, if you can get a low 3, it's not a bad thing to have, but definitely it's still a good time to buy. We just kind of stay focused on the fact that they're not high right now. They're still really low.
Yeah. I had a call from a client a few weeks ago, Guy, and she said that she and her brothers were selling their parents' home in San Diego. And she wanted to do a 1031 exchange with this property. It was quite an expensive property. They were going to get quite a bit of money out of this. And so they wanted to do a 1031 exchange to avoid paying taxes, kinds of things that we talked about with Monty and with Carolyn. Do you see 1031 exchanges much in your world?
I was seeing a couple of them a month for a while, and it hasn't really come around for a little bit. I have one guy moving up here right now that sold a apartment complex for about $1.5 million, and he's going to buy four rentals here. I think that's the guy I kind of talked to you guys about the other day. He's down in California, by the way. He'll still get in touch. Yeah. But it's but I see it sometimes. They seem to come in spurts. Yeah. So I know you kind of got to do a like property. Yeah. So if you're but these guys could. I was going to ask Monty. Tell people what a 1031 exchange is and why someone would want to use that in their real estate transaction.
A 1031 exchange is when you are deferring the gain from the sale of a piece of real estate. It needs to be an investment property. It can't be a personal residence. And so, for instance, if someone
wait, go back a second. So I could not take my house and sell it and do a 1031 exchange on my personal residence for another personal residence. Is that right?
That's correct.
Okay. Oh, I didn't
That's why you got to keep your lawnmower bill from when you bought your lawnmower, so you can keep that.
Yeah. Okay. I didn't realize that. Okay. Back to that. Okay. So, all right. Continue on.
So, for instance, if someone is to have purchased an apartment complex, say 15 years ago for $500,000, and today it's worth $1.5 million, then they would potentially have $1 million gain when they went to sell it.
Okay.
And so the strategy is to sell it and find a replacement property, in this case, of $1.5 million or more, and you defer that $1 million gain on the sale. It doesn't go away.
It just kicks it down the road,
right? It just kicks it down the road.
Until you die or whatever, or you sell it or
you
something.
Just outright sell it.
And get rid of it that way.
Correct.
You're doing it that way. Now, what's the difference then, Monty, Carolyn, between a 1031 exchange when you do it as a business versus the way you do, versus I guess when you do it as a business, right? Does that make sense?
Personal, just regular people do them. So you don't have to. Doesn't have to be within a business. They could probably speak to it a little bit.
It's investment property for investment property. So it not necessarily a business, but just investment property is what we're talking to.
If I owned a rental and I wanted to sell that rental and get a bigger rental, I could do a 1031 exchange on something like that. Absolutely. Is the tax difference? I was trying to think of a 1031 exchange or a business. I'm selling a business or something. Is the taxes different the way you calculate them versus when I sell my personal residence or I do a 1031 exchange? Is it different, the taxes?
Usually on a personal residence, there's because of the great gain exclusions, and then there's usually very little tax unless you've really have tons of appreciation. Okay. And then that's going to be hit at ordinary rates. A 1031 is got to be investment property. So, and usually those are long term. So if you sell the property, then it's going to be again at capital gain rates, long term, short term. Depending on the term that the property is held. All right. Can I do a 1031 exchange if I own one piece of property and I exchange it for 2 or 3 of them? Can I do that? Yes, you can. You can?
It just has to do with the equity position, correct?
It's all about the value of what you're getting, what you're replacing, what you're doing, right?
Yes.
So you could do multiple 1031 properties.
Yes, you are limited in the total number you can go into at one time, though. 3 is your max.
Do you see a lot of 1031 exchanges coming back? We're in 2017. What has that been like?
What we're seeing is that people have got properties that maybe they've only held them 5, 10, 15 years or maybe more, and they're selling them and they want to upgrade their properties or they want to harvest that gain because, the property's in great shape right now, but rather than maintain it, they would rather go into something new. And what you can do too is maybe sell like a rental property and then buy bare land and build. Oh, okay. You do have some time frames you've got to work within, but as long as it's investment for investment, you're still good, and it's land for land. Mm-hmm.
I can sure see people wanting to do those at different times. It makes a lot of sense, doesn't it, to maybe look at 1031 exchanges for you, especially if you have several properties.
I think one of the keys too is to also find a qualified facilitator because that's a requirement. Mm-hmm. When you sell the property, those funds are put into a trust account and held until the exchange is completed. Mm-hmm. And so people need to be aware that you don't get to hold the money yourself then within the 180-day period reinvest. It's held by an outside party.
Right. When you sell, if you declare you're going to do a 1031 exchange, you have to declare that, and the money then you say goes into a trust account and not to the. You don't get it yourself, and then go. I'll go reinvest it in 6 months. It doesn't work that way. I guess that makes a lot of sense out of the thing. Tell me, one of the things that we've certainly seen in 2016 was the advent of recreational marijuana and the changes in what has the effects on real estate. We certainly know that guy. I mean, you've seen it from your end, right?
Oh man, everybody's a weed grower now. So you wouldn't believe it, man. I mean, I think as long as you sell weed less than 10 days, then you don't have to pay taxes or something.
Whenever I hear you say that, or I hear people say that really bothers me because people are violating what our rules should be here in this. Well, not everyone can have a grow of their own. They don't have licenses for them and things like that, and that's what's bugging me.
There's people up on the side of a hill with a grow with a 9-gallon-a-minute well, and they don't have any water rights, and there's really nobody to go police this. I mean, literally, the FBI is the only one that could go in, and unless you're at least at $1 million bust, they're probably not gonna get involved. So it's kind of the wild west.
Well, the jury's still out on that. What's going to happen with that? I'm curious as to what Carolyn and Monty have to say regarding how our growers. We have 2,500 growers in here. I mean, there's millions and millions of dollars in cash that's floating around this place. What do they do with it? Do people come to you? Have you seen any business as a result of recreational marijuana here?
Absolutely.
Really? Okay.
Absolutely. When we've got a number of, we've questions and we've answered for growers. And what we're seeing is they have to understand that even though it's for federally, it's still a controlled substance. They still have to pay income tax on it. And the fun part is Oregon, being that it's legal here, there's one set of rules, and then for federal, there's another one. So, so we're spending a lot of time educating ourselves on knowing what we can take as a deduction, because the processing of the marijuana is quite expensive. It's very labor intensive. You've got to, pay all your laborers. So you want to make sure that those costs are going to be deductible. And otherwise you're paying tax on just the gross receipts. And one of the pieces too is when they're selling, if they get in excess of $10,000, that particular reporting rule still applies because it's cash in excess of $10,000. So, there's a lot of just little requirements, and to make sure that our growers are not getting tripped up. We're working hard on educating them and ourselves.
Now listen to that guy. Listen to Carolyn, what you just said.
No, it's crazy. Now, remember that from my banking days. If you had a $10,000 deposit, it would automatically trigger a SAR. But also irregular, deposits could anyway. They don't even necessarily have to hit that threshold. But if all of a sudden you're doing a $7,000 deposit every 3 days, that's going to raise some red flags also. So, you want to make sure you're doing it legally in the right way, if you can even find a place to.
And I've heard that the credit unions are taking this money in, so that may help in terms of what CPAs have to deal with in those rules as they go out of that. Well, this is a discussion that maybe we'll continue just a second here, because it's so fascinating what's happening, and it affects every single bit of person in this business. Lenders, broker, everything is affected by recreational marijuana. Anyway, we're going to hear the Real Estate Show. One more segment to go. We're with Monty Williams and Carolyn Ryder from Eisler of Medford. We'll be right back. Real Estate Show continues here on KMED. January the 14th is our date. Next week here on the Real Estate Show, the Rogue Valley Association of Realtors show will be here with us, and we'll talk to some of the instructors who teach realtors about things. And we've had some really good ones. Dan Huckins was here last time. We did a show with them about inspections and home inspections and all the world going on there. And boy, they're busy as well. So are roofers. Try to get, with all the snow and trees down, try to get a roofer out on your place right now. They're busy. I mean, it's amazing how much activity is taking place. Of course, a lot of it's weather related, as you know. Today here on the Real Estate Show, Monty Williams and Carolyn Ryder, the owners of Eisler Medford, their certified public accountants, are in the house with Guy Giles from Bank 34 Mortgage here on the Real Estate Show today. And we took that break there. We'll finish about recreational marijuana. I'm so interested to what you say about it, as it affects so much, Carolyn and Monty. And you don't see it. So you're seeing people coming to you, and this money is being taxed and accounted for. Those are good things, right? I mean, those are good things out of it.
Absolutely. It was, when the whole ruling came along on whether or not to even legalize it in Oregon, it became one of those, why make our police chase petty criminals with it, with a little bit of marijuana? Instead, let's have it be a business. Let's get the money for the state, for the counties, for the cities. No, I think it's a good thing.
And I can't wait to see. Okay. Remember, January 1st, every city in Jackson, Josephine County, voted to that 3% marijuana tax. I think everybody voted for it. Mm-hmm. So we'll see how much money revenue they are going to get off this. I am so curious as to see how much they're actually going to get. Well, anyway, we'll see what happens with that. One of the things before you guys get out of here, I want to tell us about people like brokers. You say are forming different people are forming different corporations to deal with the tax structure and stuff of this. Tell me what you mean by that and what that means.
What we're seeing is that some of the real estate salespeople they're independent contractors, right. And so historically they've always filed as a sole proprietor.
Right.
It actually, what it does is it exposes them to all of their net income being exposed to self-employment tax. But there seems to be a trend now, and it makes sense that they would form what's called an S corp. Mm-hmm. And within that S corp, they pay themselves a reasonable salary, and then any income they make over and above that is just passed through as ordinary income, but not subjected to self-employment tax.
And that saves money.
And it can be a significant savings up to the FICA limit. For instance, if you were to have $60,000 not subjected to it, that's about $9,000 in saved tax.
Really? Wow.
So it's well worth doing.
And certainly some agents, as good as sales are, there's probably a lot of people that would benefit from that quite a bit.
Very definitely.
Yeah. So what else before we get out of here, Carolyn, Bonnie, that you want to share with us about real estate and kinds of taxes and things that people might look out for in 2017? Anything on the horizon that you see? That's
That's a loaded question.
Yeah, it is.
I don't think anything specific, but I think that just the kind of the guide would be ask your tax professional, before you pull the trigger on a buy, a sell, because by timing, you maybe save some money by doing a 1031 exchange, which you've got to set up in advance. It's not just here, hold my purse. This is something that's really significant. And then two, one of the things that if farmland, we've had a lot of farmland sales.
Yes.
And Oregon has a special tax rate for just farmland sales. It's this one little provision that we're aware of as a professional. Somebody just doing, I'm self-prepared. Well, you're going to miss that piece because they don't publicize it. But it's one of those little things that we've kind of dug out, and the savings on that have been tremendous, especially with, again, the marijuana grows buying your land, and if this is farmland, then you can save on your Oregon tax by using that special provision.
There are several provisions in Oregon law, aren't there, for taxes and people? I was trying to think the homestead exemption, for example, where you defer your property taxes on your again, you have to live in the property, obviously, to do that.
Right.
Do you see some of that? Do you see that type of thing around? Do you advise people sometimes to do those kinds of things?
If it's an older person that, that their time maybe at their home might be limited, because there's going to be a catch up. Some point there is a pay period. And so that's one of the things that, we probably don't encourage a lot. But usually the property taxes are fairly insignificant if they've held the property for a really long time.
Yeah.
And there is the homeowner exclusion, so they're saving a little bit on that value.
Yeah, I've seen clients who've done that and didn't even tell their kids.
Yeah, surprise!
I told them, I said, you better tell them they're going to have a $50,000 a tax bill when you sell the house, because you've deferred your taxes on. But for some people, it does come in handy. Especially if people are trying to live if you want to stay in your home longer.
Yes.
These kinds of things, are sometimes very helpful for you. It's the same way we talked about Airbnb. So you can earn income to stay maybe in your home longer. And because we're going to have a housing crunch and a big crisis, as you know. I mean, we don't have enough housing here in Guy Giles, and nobody's in charge of it in our county. We say that all the time. And look at the rental market and look how it's changing.
Rental market?
Yeah. And Airbnbs are going to change that even further. And so, we're not building enough to replace, and we got people who want to come here. You keep saying that to me every time I see you, right? Half of your clients come from out of town.
It's everybody. It was California on the phone when I was walking in the door.
Yeah.
I mean, they're kind of coming from everywhere, so we all should, I guess, grab our nail bags and get down and start building something.
Well, the problem that we have really in the real estate market, of course, is the inventory is so low. It's over 700 less listings today than there were a year ago. I mean, you think about that.
Well, I think there's 900 something listings out there right
under
now.
Under 1,000.
In the peak in 2006, I think there was like 3,800.
Really?
Really? That kind of came up in a meeting that I had earlier today with the legislative committee, and it was, I was kind of blown away. I mean, I have way more buyers than I do places for them to buy. Sure.
I think that's true. Even at the agent meetings this week that I was at, we haven't met for a few weeks because of the weather and the holidays and stuff. People are saying the same thing. They got a ton of buyers looking for things, but there's simply not much out there. And a lot of the stuff that's out there sometimes is either going to be overpriced or it's been on the market too long. So the new stuff is coming out and going quickly. And those days on the market, not days in the market, the available homes per buyer continues to drop. It's 44% less than it was a year ago.
Yeah, and even if you're thinking
That's
about
amazing.
Yeah, even if you're thinking about selling, it might not be a bad idea to talk to either of these guys about what the tax ramifications are, or your realtor, to see what your house is worth, because it's probably worth a lot more than it was.
So Monty and Carolyn, how can people get a hold of you? Because I think you've got, you obviously are somebody who knows a lot about the world of taxes and real estate and stuff like that, and can help people. So how can people find you and talk to you? Because I'm sure someone would like to.
Well, they could obviously start with our website. It's www.eislermedford.com. And all of our contact information, of course, is on there.
You can Google them, ISLER, Eisler Medford, okay? Hey, nice to meet you, and thank you for coming in today. We'll catch up with you later in the year and see what's going on. Guy Giles, nice to visit with you.
See you guys in a few weeks.
Keep those loans going, okay?
Thanks.
That'll do it for the Real Estate Show this week. Have a great week, everybody. God bless you all. We'll talk to you next Saturday right back here on KMED.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshoworegon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.